Oh, the shark has pretty teeth, dear, and he shows them a pearly white.
What's good, everybody? Happy Thursday. Let's get my days all mixed up here. I'm Dustin Tibbetts, financial advisor with Jazz Wealth. If you haven't checked us out yet, feel free to go over to jazzwealth.com. Maybe schedule a call with us. I will speak with you personally if you have something that you'd like us to help you with. If you'd like to roll over accounts, transfer accounts, whatever it may be, maybe you're just getting started, happy to help you, happy to work with you. We use our own portfolios. We manage our own portfolios. I think we have some of the best portfolios that are available, honestly, especially our dividend portfolio, which, by the way, all of our dividends now are posted on our portfolios page, so you could see not only the performance, but also at the bottom there, you can see the dividend, and we're working on putting speed on there as well, because we invest for speed. We don't pick stocks. We don't pick mutual funds. We invest for the certain speed that you're trying to move to get you to your goals. So hopefully you'll check us out at jazzwealth.com. I will not be here tomorrow. I just sent an email out to all of our customers, taking a personal day. Anytime I'm out of the office or sick or something, I always send an email out so everybody knows that if you still need help, we're still here. I'm just not. I got some family coming in town, so we're going to show them a good time down here in the hot Florida weather. So there'll be no class. There will be a video posted at 1. Just a sneak peek, it is the worst financial advice that I could give to you. So if you want to see the worst financial advice, that'll go live tomorrow at 1 o'clock, same time that we normally go live. It'll just be a recorded video. Also, there'll be no stock market update tomorrow, which, by the way, if you're a trader or you're paying attention to the markets, tomorrow you can miss. Show up in the morning to see the jobs report. That's all anybody's interested in. Then everybody's off to the Hamptons for a long weekend. Tomorrow's market is going to be really, 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 really quiet. What we do at Jazz Wealth, we always do these videos. They're about ready to get super cool, but we do these videos to update you on how the markets did, keep you engaged. Doesn't mean you necessarily make any decisions based on what you hear. It just means you're engaged with what the markets did and you have a better understanding of the good, the bad, and the ugly. Also, next week on Tuesday, we normally do Wine and Wealth with our customers every Tuesday night, where we teach them something new. We go over some statistics, things you've never heard before. Well, next Tuesday, it'll be open house for everybody. So if you're interested, there's no real way to sign up. We'll just be going live right around 8 o'clock Eastern time. Our clients will get a link to that video so that you don't miss it, and you, of course, can watch the replay at any time. We're going to talk about what happens if you invest at the very top of the market every single time, and all you did was buy the tip top of every market. How would you end up? What are the actual numbers? What are the stats? What are the facts? But you're not here for that today. We'll see you next Tuesday for that. Today we're talking about the stock market, and hey, everything was pretty much higher today, although I'm really suspect. This is one of those days where the market was higher and you go, really? I don't know. That seems a little weird, or in old David Letterman terms, seems a little hanky. So we're going to dig in, take a look, see what we have here. Should I get the, yeah, look at that. I got the charts in there on the first try. Okay, so here's what we have. The Dow was higher by 181. The S&P added 23. The Nasdaq closed higher by 83. Thanks again to tech stocks. We'll go over that in a second. If you're looking at the Dow here, you've got, here's today's performance, which, by the way, we did a class for our customers on candlesticks. So all of our customers now understand what all this nonsense means on the charts. We explained it in great detail, and we just scratched the surface. We're going to do so much more on that, so don't you worry. But today, this is an image of the Dow, what you're seeing here. Small up day, but basically this back and forth here gives us nothing. If you happen to see that class or one of our customers and you got a part of that class there, we use the Dow as our reference. We actually explain why the markets are doing exactly what they're doing now, and now you know exactly what to expect. Although today was higher, it's really no groundbreaking, exciting move in the stock market. So the same can be said about the S&P 500. It was a good day, about 1% gains on that. So of course portfolios will be doing well. We did well, but you know, the interesting part here is tech. Tech had the best day. Did it beat the Russell? It did beat the Russell. So tech had the best day, about 1.5%. Most of the rally today came because of that, and in particular it came because of the Semiconductor Index. The SMH is what I'm using to sort of illustrate that here for you. Think about this. What goes up will come down, and it will come down aggressively. So if we look at the SMH or all the tech stocks, they're in the middle of a pretty strong downtrend. So this is just one good day in the midst of it. Now, your tech stocks, I'm going to go over to the chart the screen here real quick, because your tech stocks are all being led higher, or the market is being led higher by just a few names. 84% of what little gains there are this year have come from Facebook, Apple, Amazon, Netflix, and Google. You may have seen this on TV. The FANG stocks, or FANG stocks. It used to just be FANG, and then they added the extra A in there. So these stocks have had incredible rallies and account for 84% of the market's gains. There's only 5 stocks there. So if most of the gains are coming from 5 stocks, what do you think happens when those stocks take a little bit of a break? It's going to hurt a little bit. The difference is, on the way up, everybody goes, yeah, making some money, this is sweet. On the way down, everybody's going to go, what the hell? What's going on? Is the market collapsing? Are things going wrong? No, it's probably just these 5 names that are causing issues there. So keep that in mind, because that's going to be a topic for discussion as these things start to pull back. If we go over and look at some of those, I'll just go briefly. Facebook, positive day by about 3%. Amazon, small day, 1/3%. I don't think Apple did a whole lot either. Almost 1%, not too bad there. Netflix, up 2% again. And then, oh, actually my screen is wrong there. Netflix up 2% today, and then of course Alphabet, or Google, was up 2.25%. So you can see some of the gains coming from those. Also in the tech space, we got the semiconductors we mentioned a minute ago. Most, if not all of that rally today, I won't say all of it. Most of the rally came from Micron Technologies, up about 2.5%, and Intel up about 2.5% as well. What the deal is there, Micron Technologies, you may have remembered Tuesday before the markets closed, like right before they closed, there was some news that came out that possibly Micron wasn't going to be able to sell some of their chips in China, that China was going to restrict them. Micron said, we don't know anything about it, but we'll let you know when we do. Today they said, okay, turns out, yeah, they are going to stop us from selling some chips, but it won't affect us. Their actual quote was, it will have a minor impact on revenue. So nobody cared. Everybody enjoyed that rally. It was a good day for the semiconductor stocks. That was basically what pulled your market higher today. So if any friends ask you, hey, what made the market go higher today? You could say tech stocks, really. That was basically the gist of it. Another sector that did real well, I think it was your second best performing sector, was healthcare, up about 1% today. That continues to find its way off the bottom here, set back in April. If you look back here, just a slow and consistent uptrend. What healthcare is doing right now, the way it's moving, that's money coming from other sectors going into healthcare. This is not all of a sudden some news or something exciting. This is called sector rotation. So you've got money that is in overperforming sectors. People are looking for a place to put that, and you could tell because every dip comes on higher volume, meaning when people sell, there's a whole group of new money coming into that sector. So for now, one would call that a bit of sector rotation. Maybe that is the next sort of exciting sector. I don't know. We'll see what happens and keep you posted, of course. If we take a look at oil, this is sort of an interesting one today. Oil was down by about 1.5%, 1.6% on the day, actually. 2 stories. So Trump is accusing OPEC of pushing prices higher. OPEC fought back and said, no, sir, it's you pushing the prices higher, and you are going to be the reason that oil goes to $100 a barrel. Well, Trump gets to toot his own horn today because the price of oil came down after he made those comments. In reality, the price of oil came down because the oil inventory numbers didn't come out yesterday because it was a holiday. So whenever they don't come out the day of a holiday, they always come out the next morning. And so oil inventory numbers came out today, and they were higher, right? U.S. oil inventories are growing. So for the moment, it appears on the surface that Trump is sort of pushing the Saudis and OPEC to see the price of oil soften a little bit. But in reality, it's because here in the U.S., higher inventory. So that's that. Now, here's the thing. When we strip out all of that, there's almost nothing else to talk about. In fact, the financial media spent the whole day talking about 2 stories, really 3 stories. Really, 2 of them made more headlines, but 3 stories. One of them is Amazon. There we go. Amazon is going to make, they're going to print a brochure, a catalog of toys, and they're going to give it out around Christmas time, like Toys R Us used to do, right? Like Sears used to do. Amazon's basically saying, nah, you guys got it wrong. We're going to do it. We're going to make it really, really well. So over the next few days, with that in mind coming up, they're going to keep touting that. And Amazon Prime Day, expect Amazon to be in the news quite a bit. That was really it. Like, there's not a whole lot of other interesting things to talk about. There's a couple things you may want to know. Starbucks is still sitting near the lows. This one sort of frustrates me. A barista mocked a person who had a stutter. Okay, so Starbucks has all these stores, and you should never make fun of somebody. Of course, remember last month Starbucks closed all their stores to teach their employees not to judge people, be nice, don't bias against people, be nice to them, treat them like you'd want to be treated. Apparently it didn't work because this barista was mocking a man with a stutter. The funny part, if there's a funny part here, I don't know, I might get in trouble for this one, but the funny part is the customer called customer service. He called Starbucks' customer service to complain, right? And rightfully so. He was made fun of in the store. Starbucks said, we're sorry about that. Here's $5. They offered the man $5 in store credit. So more bad news for Starbucks there. I don't know. That's kind of weird. Facebook was higher by 3% today. Here's a story. What do you think about this? Leave a comment below about what you think about this. I want to get this one right, too. The co-founder, Chris Hughes, I've actually never heard of this guy. He's one of the co-founders. He doesn't work there anymore. He was interviewed, and he said that the government should tax the rich at 50%, 50, and then take that money and give $500 a month to people who need it, right? The poor, the bottom 1%, right? So take from the top 1%, give everybody down there at the bottom, give them $500 a month. He said that the fact that he made $500 million because of Facebook in a 3-year period is exactly what's wrong with this country. He said that it shouldn't be that way, that he made all that money. That's easy to say when you have a lot of money, but the bottom line is opportunity is created by the individual, right? And you can agree or disagree. Opportunity is created by the individual. If you don't want to go after that opportunity, you don't have to. And there's a lot of people that don't want to go after it, and they end up where they do. Access to opportunity, that is what we need to change. We need to make sure that people that want an opportunity and want to seek this stuff out are not held back because of some education level that they have or some family history or where they're from. It should be that the access to the opportunity is what helps people grow. You don't just hand out money to people. It's the most ridiculous thing I've ever heard. Anyways, he said it. Nobody really cared, but it was in the news because there was not much else to talk about today. Otherwise, I wouldn't even be talking about this because it's complete garbage, the fact that we're even acknowledging that that guy said that. But he did. And so let me know what you think in the comments below. Do you think the top 1% should be taxed at 50% and then give that money in $500 a month increments to the less fortunate or those, I don't know how he described it, the bottom 10% or something like that. Oh man, I could go on and on and on and on about that. Anyways, let's go back to the market because like I said, tomorrow the only thing that anybody cares about is the job numbers. They're supposed to come in at 3.8%, 295,000 jobs, I believe. And here's an interesting stat for you. When the jobs number, historically, now we can argue what the real jobs number is. Let's not start there. But when the jobs number goes under 4%, historically, a recession is right behind it. So the jobs number at 3.8%, we'll see what happens tomorrow. But is that a stat you want to follow? Does that make you nervous? That's one of those interesting things that I like teaching our customers, but that's what happens. So anyways, everybody's just going to pay attention to that. That comes out before the stock market opens tomorrow. And then basically, I would bet that the day is going to be kind of done. We've got the Chinese tariffs coming out as well. That starts at midnight tonight. China will fight back, but let's have a fun game here. I'll make a bet with you guys. I will eat one of these packs of Reese's if China, here's my bet, they will respond to tariffs, but they're going to do it about midday their time, right? So that's my bet. They're not going to do it right away. They're going to talk about retaliation, and they're going to do it at about lunchtime their time. So let's have some fun and see what happens. If they do it in the morning their time, then I will eat one pack of those Reese's, which I wouldn't mind if I was wrong. I'm trying to stay a little healthier, but we'll go from there and see what happens. Also, here is, well, we're on the chart of the S&P 500, right? So if we go out, I can't go too far here, but if we go out years and years and years, the stock market has been higher. 100% rally in a 10-year period. Morningstar, I'll thank one of our customers, Benjamin, for sending this in. Morningstar is yet the latest company to write about lower expectations going forward. So we talked about this last week, or earlier in the week. JP Morgan and Vanguard all are advising their customers. If you were at Vanguard and you didn't get the memo, just because you don't have enough money, come over to Jazz. We don't care how much money you have. But they're telling their customers, hey, don't expect that average return. You know the market's returned 7% on average. Let's assume the next 10 years are going to be 3.5% to 5.5% returns. So JP Morgan, Vanguard, and now Morningstar are saying, well, Morningstar is saying the next 10 years will be like the lost decade. The returns are going to be a lot lower. I think that's fair, right? I think that's fair to say. We've had this great gain. We don't need to crash. I don't buy that argument. We could just flounder around for a while, and maybe that's the case. If that is the case, you better make sure you're invested correctly. Check out our portfolios on our website. You really, really, really are going to want to make sure you're invested correctly to take full advantage of all of that. We'll do just a few more, and then if there are any questions, I'll answer those. You've got Boeing. Boeing was a little higher today. Boeing basically bought out, they got permission to actually buy out control of Embraer out of Brazil. A lot of governmental crap there. We talked about that a bunch. They got the go-ahead for that. Manhattan has its worst real estate second quarter since the financial crisis. Prices apparently not doing too well there. And Amazon said that they will start selling their prescription, they're going to be selling prescription pills, really. Thanks to they bought PillPack last week, and so they said they're going to start selling those prescription drugs as soon as the deal closes. It could be any day now, so we'll see what happens there. That's all I have for you. If you have any questions, if there's anything I can help you with, if you have retirement investments, you want to work with a fiduciary that actually does everything themselves and teaches you and moves you towards your goal, then that's what we're doing here at Jazz Wealth. Completely different than anything else you see out there. I hope you'll keep us in mind. I appreciate that River Rat 1977 who just subscribed. That's awesome, man. Thank you so much. Chris says, taxing the rich, I'd rather A, see a flat income tax, or B, eliminate the income tax and increase consumer tax. Interestingly, income tax started when Prohibition was created. Very cool story, by the way. Whether you either read about that, everyone else either reads about that, or whether you watch like Drunk History or something, you definitely want to know the background on that story. Thanks, Chris, for pointing that out. Steve Jobs paid $1 a year. He made his money in the stocks, so you'd have to change the way. Actually, the Facebook guy, he made the $500 million off stock as well. He did not make it as earnings. It was definitely appreciation in the stock. But interesting. I bet you that starts a little conversation going forward. You know, look, we can all have different opinions on how we think it's done, but when some guy starts spilling out nonsense and it's just completely ridiculous, it really makes you think, like, how do people think like that? What good comes from that? When is it ever? I gave my uncle money like 14 years ago. Haven't talked to him since. We were best friends. I gave him some money. He left town. That was the end of it. So, I don't know. If you're trying to lose track of somebody, they always say the best way to lose a friend is just give him money. You'll never have to talk to him again. So if you don't like somebody, just give him money. That's how it happened for me anyways, but we'll see. So again, tomorrow there'll be a video coming out at 1 o'clock, as we always do. It just won't be live, and there'll be no stock market update tomorrow. We'll be back on Monday, of course, to do everything as planned, and I'm going to be working all weekend, man. Working all weekend, so if I can help you in any way, let me know. We'll talk to you then. I appreciate all of you watching, and